We're a little more than 2 weeks away from tax day. Monday, May 17th is now the extended deadline. It's due to the pandemic once again. How will those stimulus checks affect the bottom line, right? What about the new programs that President Biden is proposing? Joining us to talk about all of it is Armine Alajian, a CPA and founder of the Alajian Group. Good morning, and thank you so much for starting
Good
your day with us. I
morning.
hope I got the name right. Yeah, because
You
you know
did,
what?
you
We need
did.
our bank
Armine
accounts,
Alajian, you
right?
got it right.
Thank you. Good. Okay, so we're off on the right foot. That's just how I want to stay with the IRS, okay?
Right.
People
You still have
who
time to
are
file, luckily.
fortunate enough, right? People who are fortunate enough to get those $1,400 stimulus checks or believe that they're going to get them, they're still being sent out. Are those taxable? Because, you hope it seems like a good amount of money, but if it's taxed, come on.
Right. So we had three different rounds of stimulus checks starting from last year. We had 1,200, then 600 per person, then now 1,400. So they are not taxable. They are credits that were
Woo.
paid in advance last year. Yeah, good news. They're not taxable. They do have to be reported with your tax return, but it's not taxable. So what it is with the 2020 tax return, the first $1,200 and the $600 are reported, meaning if you got it, you report it, great, not taxable, just to say it's a credit, I received it. If you didn't get it and you qualify, you get it now, which is great news because if you're getting a tax refund, this stimulus is including in that tax refund, and you get a higher refund.
Yeah.
And the 1,400,
Yeah.
again,
We
not taxable, but it will impact next year's tax return, 2021 tax year.
All right. Okay. Yeah, just keep saying the word refund over and over again. Let's channel that. The
Refund, yeah, we
child
want the
tax
refund.
credit, right? We want the refund. Child tax credit. Explain how it works. And for those who have, divorced families, separated families, the child maybe lives mostly with mom, or dad. How does it work? The child tax credit.
Right. So credits decrease the tax due. So if you own an X amount of money, those credits decrease what you pay to the government. It doesn't impact your income,
Mm-hmm.
just the taxes that you pay, which is a great thing. And depending who's claiming that child, you get that child credit again if you qualify because there are limits and all kinds of other little things.
Okay. What
So
about the
again, not
guidelines for
taxable.
filing
Credit.
this year? Yeah, the guidelines though for
Uh,
filing this year, because a lot of people were happy when the IRS delayed it last year because we were scrambling. Everyone's in the middle of the pandemic.
yes.
We needed a break. This year they
Right.
gave
Right.
us another break of a month. And
They
so, are
did.
there any other guidelines we should know about?
So taxes are due by May 17th. A lot of people think, oh, I can make an extension and not pay. No, you have to pay by the 17th, by May 17th. If you want to file an extension, you could absolutely do that. There's a 6-month extension, but it's not an extension to pay, it's an extension to file. So if you don't know what that amount is going to be, it's good to prepay and pay in estimates. So that way you don't have any penalties
Hmm.
and fees. But it's just a extension to file, not to pay. And then when you do file, if you owe, you pay. If you get a refund, then you get a refund.
Okay. All right. But we don't want the government, too, to have that, interest free loan if you're getting a refund. But it is what it is.
Right. So
President
I
announced a
suggest
proposal.
filing earlier.
No, go ahead.
Oh, no, I just suggest filing earlier, or at least have an estimate to know what it looks like. Then
Yeah,
you could
that's
get an
important.
extension, or you could
President.
amend too, right? You could always amend your
Yeah.
taxes. Yeah.
Yeah, there's that. The president announced a proposal to raise taxes on big corporations and people making more than $400,000 a year. If it's approved, when would it go into effect? And $400,000 seems like a lot of money, but you're in New York, and a couple, could make that. So I don't know if it's for couples or it's expensive to live in some places.
Yeah, so it won't be for the 2020 tax year. It's not passed yet, so it'll be in 2021 or future years. And it's based on your taxable. income. So if you're filing separate or if you're filing married, it's on the tax return. So like whatever your net
Hmm.
taxable income will be for that year, then those tax rates will be determined. But it's not for 2020, so we don't have to worry about that this year. The great thing
Okay,
for
but get ready for some
2020 is the
deductions.
unemployment. Yeah, so the unemployment that
Hmm.
they made non-taxable, the first 10,200 is not taxable. But again, it depends. If
Hmm.
you're a high earner, that might not apply for you. But it was still
Yeah.
very good because a lot of it used to hurt people. The first month or so when people
Yeah.
filed, they had to pay taxes on the unemployment income.
Yeah. The experts are saying, who are these experts? We always point to these experts, but some tax experts are saying we're not going to see an interest rate hike until 2023. So, shouldn't people be taking advantage of that? And if so, how? And I don't know if that's about, stocks and that whole thing, but break it down for us.
Which interest are you talking about? There's so many different interests and deductions. Maybe that's more of a personal financial planning thing more than a tax
Yeah.
return and how it implies. Nothing for 2020.
Okay.
There's a lot of things in the works for 2021 and future years. So we'll just keep watching to see what
Okay.
happens.
Okay. And so, as we wrap up, just real quick, if you had to tell people one tax tip, okay, 2 weeks out, what's like the biggest deduction missed, or what should people be doing? One tip.
One tip. So, stimulus is not taxable. If you are an employee working from home, unfortunately, you can't deduct working from home. If you're a business, self employed, you could, but there's a big misconception. Everybody work from home and they think, oh, I could deduct this. You can't. That would be a conversation between
Mm.
the employee and the employer. It would be a reimbursement between the two, not so much a deduction on the
Mm.
tax return. And the biggest one, that whole
Sounds like you
deduction,
better.
people think, oh, I can deduct, but it's those deductions are for
Yeah.
businesses. Individuals get itemize their
Armine,
standard
that's great
deduction.
advice. Yeah, we're going to wrap it up with that because that's great advice because you're either going to have to talk to your employer and ask for a reimbursement, which a lot of people don't want to do, or you sounds
Right.
like you'll be talking to an IRS auditor, and we don't want that.